Okay, let's just dive right into a question that's probably been floating around in the back of your mind lately. Can artificial intelligence actually grow real money better than a human? We aren't talking about answering trivia questions or writing emails here. We are talking about taking cold, hard cash and trying to multiply it in the real world. Welcome to today's Explainer, where we are breaking down a really fascinating 30-day experiment that did exactly that. We're looking at what happens when you give an AI $100, step back, and completely hand over the reins. It's literally the ultimate test of man versus machine in the financial arena. And I want you to make your own internal prediction right now as we set up this high-stakes experiment. Will blindly trusting a chatbot lead to a surprising profit, or is it going to result in an absolute wipeout? Lock in your guess because the final outcome of this journey completely changes how we should all be thinking about AI and our own money. Now, to answer this question properly, we had to establish some non-negotiable ground rules. Just to make sure this wasn't some wild get-rich-quick gamble, there were 4 very strict rules in place. First, a hard $100 limit. Second, the human had to follow the AI's plan to the letter. Third, absolutely zero tweaking of the investments because of sudden panic or excitement. And fourth, a strict 30-day countdown. The goal here was pure. See if the AI can make objective, rational decisions without a human messing it up. So how do you even kick off a test like this? Well, you keep it incredibly simple. The exact unedited prompt given to ChatGPT to start the whole challenge was just this. If you had $100 and only 30 days to invest it, what would you do? That's it. No feeding it complex market data, no weird constraints other than the time and the budget. It was essentially a blank slate just to see how the AI fundamentally approaches wealth building from scratch. Now, you might expect a machine to spit out some wild, high-frequency day trading scheme, or maybe point you toward a random meme coin. But honestly, it completely avoided those crazy bets. Instead, ChatGPT provided a highly structured and frankly surprisingly boring diversification strategy. It advised keeping part of the funds in stable assets, putting another chunk into higher growth opportunities, and crucially, it absolutely insisted on never risking the whole budget on a single trade. You see, the AI's entire logic was anchored in a very fundamental financial concept: risk management. It prioritized protecting the original $100 over chasing massive, unrealistic gains. And honestly, that conservative textbook approach sounded a whole lot smarter than a lot of the sensationalized financial advice you see floating around social media these days. So, trusting this risk-managed plan, the clock started ticking. Let's look at how this actually played out over the 30 days. Starting on day 1, the money was invested exactly as the AI planned. And at first, well, nothing happened. But the human element immediately crept in. The urge to check the portfolio every few hours kicked in super hard. The excitement, the nerves, that borderline obsession of having real money on the line. If you've ever invested a dime, you know exactly what that feels like. Actually, before we get into the absolute roller coaster of the middle weeks, think about your own habits for a second. How often do you check your own portfolio? Are you the type to refresh your app every single day, every hour? Or do you have the iron will to just ignore it entirely for months at a time? This experiment really holds a mirror up to our own psychological compulsions when cash is involved. And this brings us to the reality of week 1. On one hand, the market was essentially flat, just minor sideways fluctuations. But on the other hand, the investors' emotions were totally in overdrive, sweating over tiny, meaningless losses. Even though the portfolio barely budged, the psychological toll of seeing the balance go down by just $2 or $3 felt incredibly heavy. At this point, the human author was seriously starting to doubt if trusting a chatbot was a huge mistake. But then, week 2 rolls around and, hey, we get a glimmer of hope. Things started to shift. One of the AI's chosen investments suddenly jumped, and while another dropped slightly, the overall portfolio slowly crawled into the green. Now, it wasn't life-changing money. We're still talking about a $100 starting pot here, but it was just enough to make you stop and wonder, wait a second, maybe ChatGPT actually knows what it's doing here. And this early, totally unexpected success sparks a genuinely fascinating debate. Could AI eventually become better than professional investors? Think about it. If these machine learning models keep getting smarter, faster, and more capable of crunching vast amounts of data without the heavy baggage of human emotion, are they going to outpace the seasoned veterans of Wall Street? It's a massive question to chew on as we watch the rest of this timeline unfold. But of course, the market is never a straight line up, and the suspense really peaks in week 3. This was, hands down, the hardest part of the experiment. The portfolio suffered a brutal drop.
those hard-fought profits just vanished into thin air. This is the exact moment where the vast majority of regular folks panic. The human urge to hit the sell button, abandon the AI's careful strategy, and just cut your losses was completely overwhelming. Which brings us to a huge realization. Sometimes doing absolutely nothing is the single hardest investment decision you can make. Adhering to the AI strategy meant fighting every human instinct telling you to run. It meant white-knuckling through the anxiety and simply waiting out the dip. Without those strict rules we set up back on day one, the experiment would have failed right here. Not because of the machine's choices, but because of good old-fashioned human panic.
And that brings us to day 30, the final week, the moment of truth to see whether handing the keys to a chatbot ended in success or a total disaster. The 30 days are up, the waiting is finally over, and it's time to open up the app one last time and see where things landed. Take a deep breath. Time's up. And right here is the exact final balance of the 30-day challenge. But honestly, here is the real secret of this entire explainer. The creator of the experiment realized they learned something infinitely more valuable than the actual dollars and cents they made or lost. Because regardless of the monetary outcome, this whole thing revealed 3 core lessons. First, AI is an incredible research assistant, but it's not a hands-off manager just yet. Second, it's definitely not a crystal ball. It can't guarantee a profit any more than you or I can. And third, and this is absolutely crucial, human emotion, fear, greed, and patience is usually far more dangerous to your wealth than the market itself. You see, ChatGPT didn't have any secret insider information to magically predict the future. Its real superpower is that it forces discipline. It demands diversification. It actively limits your emotional decision-making by setting up strict risk management right out of the gate. The AI basically acted as an emotionless enforcer of traditional investing discipline. It didn't panic in week 3. Only the human did. So, knowing that the AI's greatest strength is actually just keeping our own human panic in check, let me leave you with this final thought. If someone handed you $100 right now, today, what would you invest it in? Would you trust your own instincts and ride that emotional roller coaster? Or would you ask a machine to build you a boring, diversified, completely emotionless portfolio? The technology is here, right at our fingertips. But the real question is, do you have the discipline to follow it?